Welcome back. The IT stocks are supporting the Nifty from the way down. In fact, Infosys and TCS have moved to the high point of trade. The IT index comes up for you. That tells you the story of the day, where there is a bit of a tug of war between bulls and bears. Right now, it is being supported from the IT sector for the bulls itself. Let's talk about EaseMyTrip. Now, it was a steady quarter. Revenue growth came in on account of the hotel business, which showed a strong growth in both earnings as well, revenues as well as the operational performance. So the stock is slightly under pressure, maybe because the street would have liked the air passage business to grow a lot faster as well. So to discuss this and more, we have with us Prashant Pitti, who's the co-founder at EaseMyTrip. Prashant, while overall reported numbers are pretty strong, the air passage business, it seems like for the last 3 or 4 quarters, the reported growth has been below what the industry has been growing at. So just wanted to understand what explains this and what your targets out here are.
Well, thank you firstly for having us on the show, Mangalu. Basically, as you can see in the last particular quarter, we have focused a lot on the bottom line, and the company's PAT, which has come to about 34 odd crores, have increased significantly when you compare year on year, even though the GBR, the gross booking revenue, might be the same. So we have been saying this for the last 1 odd years, that the company is more focused on the bottom line, not on the top line. Besides, the company is also focused on growing the non-air space and also international expansion. And the results are in the viewing. You can see our Middle East business grew by a whopping 140% when you compare year on year. And in the last year, we did total in the last quarter, we did total business of about 126 crores just from the Middle East.
Yeah, but that's on a low base, Prashant. We understand all those parts of the business which are doing extremely well. The point was that at what rate are you expecting your air passage business to grow this year?
See, if you say that last year, last to last year, our cash flow was negative. But in the last year, we turned it around. And from negative cash flow, we have made it to about 120 odd crores positive cash flow. So now we believe the time has come for us to catch up on the GMV again for the airspace. EaseMyTrip has done this multiple times over the period of last 16 years, where we have categorically focused on one particular thing in one particular year. So for the last year, the focus was on the bottom line. But going forward onwards, we can expect us to catch up on the GMV.
And what would that mean in terms of numbers?
It would be hard for me to say those numbers right now, but in the next quarter results, we probably will give some guidance.
Okay. All right. When you spoke about cash flow, 120 crores positive in FY24, what are you envisaging, or what's your guidance for FY25? And what are you probably making? Yeah.
So the idea is to continue to be cash flow positive along with being profitable. And this year as well, we anticipate the same thing. However, few key highlights I would like to share for this particular year is the focus on the GMV again, along with maintaining the strong profitability and also growth in our hotel and holiday space. As you could see in the last quarter, we grew our hotel and holiday space by about 120 odd percent, 117 odd percent. We would want to continue focusing on hotel and holiday space and also the international expansion for this particular year.
Okay, all right. But are you giving us a number for the cash flow? 120 crores goes to what figure?
That I don't think so I'll be in position to provide at this moment.
Okay. I just wanted to get a sense in terms of, what we are expecting when it comes to the hotel segment this time round. There was some amount of strong growth that you saw there. You did around 27 odd crores, 27 and a half odd crores. Give us a sense in terms of what we are expecting when it comes to revenue growth there. How much is it as a percentage of sales? How much do you want it to rise to? And these 18.5% EBIT margins go to what level?
So current EBIT margin for our hotel and holiday space is actually in a good space of about 18.5%. I believe that we would want to continue with this similar EBIT margin. One thing which we are looking forward is to make at the time of listing, 97% of our business was flight business, and now it has come to 88 or 89%. So we look forward to continue with this trend, and in the next couple of years, we would want our non-air versus air to become 25-75, 25% to be non-air and 75% to be air. And something similar is what we are looking for India versus non-India business as well, which is business originated by Indians versus non-Indians.
So what does that number stand at? Because, your Dubai business has done extremely well. Your office, you were talking about that earlier. And if you look at the first quarter itself, the gross booking revenue has been 127 crores, which is 50% of what you did in all of last year. What are you expecting here?
So as I said that, to provide exact guidance for this year would not be possible at this moment. However, the next quarter results, we surely will be able to provide some guidance. Okay. However, for the next couple of years, as I said, that we would want 75% of the business to come from India and 25% of our business to come from outside India.
Okay, we're not asking you for forward-looking statements, but currently, what exactly is your market share? Because the last 3-4 quarters, because of your focus towards cash flow, your air business revenue was below what the market was. So have you seen some loss in market share? What does it stand at right now?
No, we stand at our market share. We may not have grown significantly, but the market share still remains the same. In the OTA space, it'd be about 22%.
Okay. What is discounting like? Because that we understand was around 3.1% of your gross booking revenue in Q1. And that's increased from levels of around, say, 2.9% in FY23. So what is it tracking at right now?
So if you compare it year on year, last year it was somewhere about 3.2%. Quarter on quarter, it was 3.3%. So there is a slight decrease, but I would say that it probably would hover around 3% in the long run as well.
All right. 2 questions before we let you go. Prashant, one was on the Ayodhya hotel. We understand that, bookings to Ayodhya have dropped over the last couple of months or so. So if you could give us a sense of how that business has panned out, and do you still intend to go ahead with that hotel? That's point number 1. And secondly, yeah, please go ahead.
So we do intend to go ahead with it. It is still going to take a couple of years for that hotel to come into fruition and life. It is going to be the closest 5-star available to the Ram Mandir, and the inventory is only going to be about 180 to 200 odd rooms.
But there has been a dip in footfalls there, right? There has been a dip in footfalls there, right? And bookings as well.
There has been a slight dip in the bookings and the footfalls over there. However, to fill up 180 room inventory, which is closest 5-star to the hotel, we do intend to bring some exclusivity where that hotel will only be exclusively available on EaseMyTrip. We do not see any challenge to fill up 180 rooms on per night basis.
Okay, all right. Just a quick update with regards to your fundraising plans. You had plans of a QIP worth around 1,000 odd crores. Where does that stand?
So we have already taken the board approval to do the QIP of about 1,000 odd crores. We are still in talks with various people, and also as and when we take that plan to fruition, we will share the board resolution, and then we'll come on television and let you guys know.
All right. Always a pleasure speaking with you. Thank you, Prashant. Wish you good luck for the remainder of this year as well. Let's hope that GBR increases for you and you gain your market share once again this year, with the cost, being contained and you seeing better margins going ahead. Thank you for joining in. With that, we'll slip into a short break. As we do that, here's a quick programming note. Global investor, author and columnist Ruchir Sharma in his latest book has argued a more restrained government in India has been generating faster growth. He also talks about how India's stock market performance versus the rest of the world has been, but highlights a critical flaw in his latest book about what went wrong with capitalism. To know more, tune into CNBC-TV18 for a freewheeling chat on the global markets and the Indian economy later this evening at 6 p.m.